Welcome to the Bullish Money YouTube channel, and this is part 2 of our silver price manipulation video. And if you haven't seen the first part, I urge you right now to check it out, because that video really lays out the technical mechanization behind silver price manipulation, and this second part will make a whole lot more sense once you see the first part. So, getting into it, I wanted to talk about some of the reasons why the silver price, that there's manipulation going on within the silver price, within the silver markets, and within the precious metals as a whole. And so the first reason I want to bring up is the idea of volume. Okay, we're not talking here about manipulation in terms of like some manipulation monster that is so obvious and is just stringing everybody along, and everybody can see the manipulation, and everybody can, it's like watching professional wrestling, right? We're not talking about professional wrestling here. What we're talking about is that in terms of volume, when there's thin volume versus liquid volume or large volume, the differences in those environments allows manipulation to occur more easily or not so easily. And in terms of a very liquid market, such as the SPY, the fund, the ETF that tracks the performance of the S&P 500, that's a very, very liquid market. Almost everybody trades the SPY. And so it's going to be more difficult per se to manipulate that kind of market, because everybody's trading that market. You can't just have one person selling a bunch of SPY contracts, because there's just so many other people that are trading the SPY. I mean, I trade the SPY, you trade the SPY, your mom trades the SPY. Every single person is trading the SPY. But not everybody is trading silver. Silver naturally has a very thin market. It's almost like a parochial market. And in terms of the silver price fix that is determined by the London Bullion Market Association, it certainly is a very parochial market. It's a very exclusive, I should say a proprietary market, not a parochial market, a proprietary market, because it's controlled literally by 5 of some of the world's biggest banks, JP Morgan being one of them. And so when you have such a thin volume, one person, one entity, one powerful entity could really dramatically change the trajectory of the silver market. When you look at the why of silver price manipulation, just know that the thin volume of silver naturally lends itself to being manipulated. This part of it is not a conspiracy theory, because it's just the way that things are. I mean, if you have a thin market, you're just going to be more vulnerable to extra management, if you will. The second point I'd like to bring up is that suppression is control, and control is money. When you have this thin volume market in silver, that naturally allows the people, that the entities that control that market, in the LBMA's case, it is a very exclusive membership. You can control at will the price fluctuation of silver, because it's between you and 4 other big banks. I mean, that's a very, very exclusive club, and that doesn't really lend itself to extra unwanted eyes. I mean, yes, silver, supposedly is as transparent of a market as any other market, but in reality, the thin volume means that there's just not that many eyes. There's not that many regulatory eyes. There's just not, the public eye is just not being focused on silver. Why should it be? I mean, when there's the SPY to invest in, or many other number of liquid markets, silver just simply doesn't catch the public's attention. And because of this, there is a natural incentive to suppress the price of silver, or to suppress it in the right manner, in the right timing. And of course, you're going to, the market manipulation isn't just about suppression. It isn't just about downward movement, because ultimately you want to be able to control both the downward movement and the upward movement to make money. And what better way to make money, what better way to make predictable money through these market fluctuations, by controlling that very fluctuation. It makes perfect sense. A lot of people, you'll be hard pressed to find somebody that wouldn't want this type of control. And this type of control is necessarily corrupting. I mean, when you're talking about using control to make money freely and at will, I mean, who wouldn't take that? I mean, I'm not saying that it's right, but I'm saying that the temptation that control lends itself to is enormous. It's enormous temptation. Very, 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 very few people would have the willpower to be able to run away, to walk away from that temptation. Finally, why silver is being manipulated is that when you can control the market, it gives you the ability to proliferate that market. And the best example I can give of this proliferation of one's market is the Federal Reserve banking system. You know that when you are part of the banking system, that the money that you give to the bank to put into your into your checking account or into your savings account, that's really not money that is necessarily stored one-to-one, as a one-to-one ratio, meaning that if you put in $100, there's no guarantee that that $100 is being purely allocated to you, because once the bank gets your $100, they're going to lend it out to other people. And essentially, for every $100 that the bank receives from its members, it essentially, based on roughly speaking, with where the reserve rate is set, for every $100, the bank can lend out $90 of that $100. So as the bank receives more $100 bills from other members, it can lend out $90 each time they receive a Benjamin. I mean, that's incredible power. That is the ability to proliferate your own market. Now, why would you want to proliferate your own market? Well, it's very simple. This is Occam's razor simplicity right here. Why would you want to proliferate your own market? Because you want to make some damn money. You're going to lend out all this money because you're going to charge interest on that loan, of course. And the more loans that you issue to people, the more interest payments that come back to you. I mean, this is basically the essence of free money. When you're able to proliferate your own market, you expand your market of making more free money. And so in the case of silver, you can issue things like, the silver ETFs. They're not backed one-to-one. I mean, if you buy a contract saying that this contract that you're owed 1 ounce of physical silver, you are lying to yourself that paper certificate guarantees you that you will have a one-to-one relationship between the face value of that certificate versus the ounces of physical silver that certificate represents. You're lying to yourself if you believe in a one-to-one ratio relationship. It simply doesn't exist. What these paper certificates allow is a promise, right? It promises that you will receive your physical silver in a one-to-one relationship, but in reality they're just doing the banking system but with silver. Okay, instead of saying that we're going to have a 10% reserve based on fiat promises, what they're saying is that we're going to have a 10% reserve on physical silver. So there's going to be all these promises, but instead of fiat, it's just based on silver or gold or whatever physical asset that certificate represents. But in reality, we're just proliferating. They are proliferating their own market. And so is there an incentive to manipulate the price up and down? Absolutely there is. Absolutely there is. There is every incentive to get involved into suppressing the market, to controlling the market, to proliferating the market. All of these activities points to one road, that it allows those who control the silver market to make an enormous amount of money simply on the promise of 1 silver ounce. That 1 silver ounce can be used to make money not only in controlled trading activities through suppression, through price manipulation, but you can proliferate that market, issuing a whole bunch of paper promises. And we're still just talking, the crazy thing is that the amount of silver, the amount of physical silver in a bank's holdings, for example, hasn't changed. It hasn't changed. What has changed is the dilution of those paper certificates. But the dilution doesn't really matter when you control the market, when you control the information of that market. They will issue all these paper certificates and nobody's the wiser. They'll just say, oh yeah, this certificate, it's a promise. No, it's not. It's not. Just like when the bank gives you a loan and says, or when you give money to the bank and you assume that money is physically stored away in a safe place. No, it's in somebody else's pocket as soon as you give it over to the bank. And it all is, it's deep, it's intricate, it's complex, but at the same time, the output is very simple. It's all a scam. It's all a very convoluted input scheme, but the output is just a scam that you get screwed, and the big banks and the powerful financial aristocracy gets to keep the money and gets to have fun with it while you starve and are languishing. And it's an evil genius, I would say.